Hey everybody, it's Pete. Welcome to Stock Trading Pro, and more importantly, welcome to Stocks for Breakfast. Today we got a really good show for you. We're actually going to break down the entire market today and which stocks I'm watching during the week. Obviously, the electric vehicle stocks are going to be a priority for me this week. Something very subtle that we're going to talk about in the electric vehicle stocks is the size of the candlesticks and how it starts to tell you that there's institutional attention on a particular stock. We're going to break that down. We're also going to talk about tracking journals versus trading journals today. And I'm going to give you three links, actually one link that has three different videos on how to keep a trading journal, something that is so important that a lot of people take for granted. Pre-market trading journal, during hours trading journal, and then after hours. Probably the most important trading book you'll ever read is your personal trading journal. But before we do that, and before we kind of break down this week's daily ticker and specifically what we're looking at for this week, I want to give you a little bit of an insight into a coaching session. Well, actually, it's a swing trade session. Every Saturday, we have a swing trade session with our community, setting up the next week's trading. The beginning part of that session, we started to really break down the challenge that a lot of people have is understanding what kind of profits you should be going after. And if you're not sure what kind of trader you are, it's going to be very, very challenging to run your business efficiently and, quite frankly, with conviction. And the best way I can describe this is, are you running a pizzeria? Are you running a deli? Are you running a taco stand? Trying to run all of those kinds of things at the same time is very, very challenging. And I'm even going to break that down even a little bit further, but stick around. We'll be back in just 1 second. I just actually have to put this up on the screen just to make sure that we're cool. All right, so obviously everything that we discuss here is for educational purposes, but it's my mission to help you make the best decision. So what I want to do first is I kind of want to walk over into this sheet, and this is just kind of a little bit of a heads up on what we talked about this week. And I thought it would be kind of cool to share heading into this week and to really give you some long-term ideas on are you trading with conviction, and more specifically, where is that conviction coming from, or where is that lack of conviction coming from? So what we talked about was the span between when you put on a good trade, it starts to move in your favor, and then you get like this one red candle and it shakes you out of your shoes, and you're like, oh my gosh, I got to take this profit. As soon as it slows down a little bit, I got to get out. Now, there's nothing wrong with shorter term profits if that's what you plan to go after prior to putting on the trade. Some people, now this is really what I want you to think about right now. We're going to actually go into the document here, okay? What kind of price action are you looking for? Now, this is actually the biggest part that I want to get across here, and I'm actually going to highlight that for you so it stays obvious, right? As soon as the stock has a red candle, you panic. Now, let me ask you something. Is that you? Which one of those two things that you have? Let's say the stock moves in your favor, pulls back, and you're like, oh my gosh, I got to take this profit. I got to get out of this thing. Or are you the kind of trader that says, you know what, that thing paused a little bit. I'm in a good idea. Spent all that time building the argument for the trade. Pauses are a natural function of the market going up. You get a push and a pause, right? We all know that as a bull flag or a pennant or a wedge or any of those kinds of things. Now, I want to be clear about this. If you panic as soon as a profitable trade slows down or pulls back a little bit, that's not necessarily a bad thing. I want to show you what I mean by that, okay? What we call in our community is that's feedback. There's nothing wrong with quicker profits if that is your choice of how you're choosing to run your business. Now, some people are day trading. Some people are looking for these momentum type trades, which are 3 to 5. And then some people are looking for these longer term moves, which most of us know as a swing trade. Now, if I can give you a little bit of experienced trading insight, the more clarity you have on what type of profits you're going after, which also has to affect or include what kind of risk tolerance do you have, both against you and when profitable trades pull back a little bit, it becomes a heck of a lot easier to know which order flow you're looking at. Now, if you don't happen to know what order flow is essentially when a stock has institutional attention. So essentially, if you could imagine, let's use our bait here as an example. Good morning and welcome from Europe. That's awesome. I really appreciate that. So let's say that he has a hedge fund, right? His hedge fund has research, and his research analysts say, hey, let's get in there and we're going to buy Tesla as an example, right? Tesla stock looks good. So that institutional attention now goes out to the market and orders start going down to the floor of the exchanges or however they're actually working those orders. Order flow is the consistent slow accumulation or distribution of a stock where it's going into a stock or out of a stock. Now, order flow, the way that we do things is stacking the order flow is kind of the next level of how to actually use the order flow. If you can understand, and it just kind of makes sense that institutions are what move stocks around. Our job is to say how long have they been doing it and then track it into sectors and groups, which kind of makes it really easy to trade once you have a structure. The point that I want to make here is that when you are very clear on what type of order flow you are trading, are you a day trader and you're looking at order flow over the next hour? Are you a momentum trader looking for order flow over the next 3 to 5 days and then you're done when that slows down? Or are you more of a traditional swing trader and you're looking for like maybe the next 10 days, maybe the next 30 days, or maybe even longer if you have a trailing stop loss system that keeps you into those trades? And that's actually a really important thing as well. You never want to limit what your profits can do, but you do need to know very specifically when it slows down in the context of your trade. So I'm just going to give you a little bit of an example. So if we kind of work our way over to the charts here, and let's just say we're looking at the S&P 500. If you are what you might call a momentum trader, as soon as that rally slows down and takes out the previous day's low, you might be like, wow, that was great, but now it's slowed down and I'm done. If you're a little bit more of a swing trader, you're actually okay with this thing pulling back a little bit as long as it stays above your entry and you're good with that. So you're pushing and exiting, pushing, pausing, holding, and maybe even adding for the next trade. Now, why is that so important, right? Well, let's think about this. Into our community, a lot of new members that come into the community, the number one thing that is the biggest challenge for them is they are overwhelmed. Just far too much price action. Everything is all over the place. There's so many indicators, so much news to read, so many different ways to put the market together. And I want to give you this quote, and I hope it inspires you to, kind of get a notepad, start writing things down and say, how do I actually want to interact with the market? I promise you, if you spend a couple of minutes writing down, do I feel comfortable when a stock pauses or do I panic? And just right there, that's a little bit of feedback that you're getting from the market, and there's nothing wrong with it. It's literally telling you the kind of trader you want to be. Now, in our community, we have all of those. We have day traders, we have momentum traders, we have swing traders. But more importantly, when you know what you're looking for, you're never lost. And that's a very important thing to understand when you're choosing to put your hard-earned money in the market. It is infinitely easier for trading to be a lot of fun when you know what you're doing before you need to do it. All right. So I just wanted to start that out today. Now, the next part of what I wanted to talk about, actually, let me actually finalize that because I don't like to just give information. I really want to make sure that it's usable for you. Pay attention when you're trading and pay attention to how you feel when your stock slows down. Is it an opportunity for you to add to a good position and you feel good about that because you're trading a little bit bigger move? Or when you have a profitable trade and it slows down a little bit, are you like, oh, I got to get out of this thing and get out of it right away? Again, there's nothing wrong with either one of them, but the market is telling you what kind of profits you should be going after. So I'm actually going to put this back on the screen. I want you to take a snapshot of this so that you can actually start to use it for yourself. So if we kind of go back over here, take a snapshot of that because it's a really nice framework for you to start to think about what kind of trader am I and how am I going to choose to allocate my money to the market? But more importantly, the actionable part of that is which charts and more specifically, which order flow matters to you to make decisions. Once you have an answer to that, you have the perfect map based on your goals, your resources, your experience, your risk tolerance. And that's when trading becomes really, really fun. And that's actually, that's a big part of what I do because, I've been trading for 23 years. So I've gone through all of these things and I've been helping other traders, both when I had my firm and now obviously through these YouTube videos, really get some clarity on the fact that the market's not this big, crazy, chaotic, overwhelming machine. It only becomes that way when you're not sure what you're looking for before you go into the market. When you know what you're looking for, it's actually kind of fun. So we're actually going to bring that up to the second part of what we're looking at right now is we're going to look at how to write a trading journal. And actually, I got a link for this in the description below the video. we have three different kinds of journals. There's before the market opens, there is during market hours, and then there's after the market closes. So if you could remember something that's very, very important, everything that happens in the market after you put that trade on is feedback telling you what you need to learn. Now, the problem that a lot of people have, and I'll be honest with you, this is one of the biggest mistakes I made probably for the first 18 months that I was a trader back in 2000, was I didn't pay attention to the results, and I kept trying to just study my way to death into really learning something, instead of just paying attention to what I did know, whether it worked or not, what kind of feedback I got. Eventually you get to the point where you start writing down notes, you start to jot a little bit really quickly, and all of a sudden what you're doing then becomes, okay, I did this, here's what happened, and here's how I reacted. Here's what I'm seeing, here's what happened next, here's what I did about it. When you start to take a couple of seconds to just jot down, this is what I see, this is what I plan to do, and then on the weekend read it. So don't write it and edit it. Write it and leave it alone, because that's the raw thoughts going through your head. And then you read it on maybe Friday night or Saturday morning or Sunday morning. You're going to be surprised, if you have a good education in trading, how smart you actually are, and you will start to trust yourself a little bit more, because the most important trading book you're ever going to read is your trading journal, because it's specific to your experience with the market. So click that link below in the video, and you can watch all three of these videos. There's a whole bunch of other stuff in there. And if you have any follow-up questions on trading journal or anything we're talking about, you can leave that as a comment below the video as well. I'd really appreciate it, because I want to help. I want you to tell me what you're thinking about and what you're going through. If we do a good job in these videos, if you could do me a favor, also make sure you subscribe and give us a thumbs up. It helps me know that I'm helping you. So we're going to kind of now work our way over into the list of stocks that we're looking at, and we're going to dive a little bit deeper into what's going on in the market. So obviously we got some pretty big earnings this week in the market. We saw the financial stocks report last week, and kind of a mixed bag, right? JP Morgan actually reported big move to the upside, but then there's heavy volume move to the downside. Looks like we still, as long as we're above 144, we're kind of okay over there. Wells Fargo's kind of the same thing, also above this breakout level. You can actually see where the next significant level of resistance is. Citigroup kind of took it the hardest. Massive volume, took out the last 3 days of trading and pulled back. I'm personally looking at one of the biggest stocks that I love to trade is JP Morgan. So that's actually going to be a big focus for me this week. This is a pretty big pullback on heavy volume. It looks like we're hanging out right around 150. So what I'm really looking for in JP Morgan right now this week is I'm looking for the first day that the stock goes well bid. Now, well bid means higher highs and higher lows. Now, I want to be very clear about what I just said. That's what I'm looking for. So because the stock is in play coming off of their earnings report from last week, it now has my attention, has massive volume, stayed above that breakout at 144. But I want to be clear about what I said. And this is where you start to have massive fun in the markets, because I know exactly what I'm looking for. And until I see that, I'm not doing anything. So what I said was, I am now looking for the stock to go well bid. And I'm going to take that a step further. Well bid means higher highs and higher lows. But I also want to see it close in the top 10% of the day. So when Wells Fargo and JP Morgan go well bid, which means higher highs, higher lows, and closes near the high of the day, that means I'm getting feedback from the market, where the market is now stepping up and saying, okay, the earnings came out, we digested it, a little bit of profit taking, probably a little more profit taking in Wells Fargo, because it had a little bit of a rally here starting after this big double bottom here. So really 36 up to 45, pretty decent percentage move. But more importantly, you can clearly see the higher lows. You can clearly see the higher highs. So this was a little bit of profit taking off of this move, which, what was the percentage of that move from that double bottom? At that point, it was a 24.5% move, pretty decent move. So we kind of work our way into what we're looking at now. We have Goldman Sachs coming out, Bank of America, Morgan Stanley, all scheduled this week, Tuesday and Wednesday. Airline stocks. Oh my gosh. Have you been watching the airline stocks, especially Delta Airlines? Oh my word. These stocks have just been on fire. Now, a little bit of profit taking. So very similar to what we just saw in Wells Fargo and JP Morgan. Today, we're going to look to see when these stocks go well bid after this move. And actually, again, let's do some percentage moves here on the breakout here. This is a 51% move in 41 bars. So that's 8 weeks. 51% move in 8 weeks after it finally got out of this box. That's a pretty big move in this stock, right? Summertime is here. Everybody's booking their stuff. That's a pretty big pullback. So I'm actually now looking for this stock as well to go well bid. Now, why do I keep repeating well bid? Raise your hand if you've ever wanted to buy a stock and you just got in because you wanted to buy it as opposed to buying it at the right time. So what we are looking to do is avoid this strong stock pulling back and melting lower, melting lower, melting lower. And we bought it because we wanted to, not because our timing was good. But when we say timing, we're really more concerned with, has the market now in this stock that had institutional attention, has this stock started to reestablish the buying pressure that I'm looking at in the first place? So the way that we're looking at that, and specifically in this stock, as of right now, we are pulling back. So we had what we call a big bearish U-turn. It's also a bearish engulfing candlestick. And then we went the opposite of well bid, which is well offered. So instead of buying this just because of all of this buying pressure, I'm not going to sit in. If this thing just kind of melts down, melts down, melts down, I'm not going to get involved. I already know what I want to see, which is, as we're explaining here, we want to see well bid. We want to see higher highs and higher lows. When we see that in these strong stocks, that's when we look to put the trade on. So I want to be super clear about this. Pick a side, then pick a spot. Don't just get in because it's obvious. That's really one of the worst things you can do, is just, I can't wait to get in. You have all this fear of missing out, and all of a sudden the stock that looked amazing, you get in, maybe goes one more day, pulls back like 3 or 4 days, which is, again, a natural part of the market. You get stopped out, and then the thing does exactly what you thought. And then you cry to your mother and you say trading doesn't work. And it's not trading doesn't work. Your timing was off. So I'm going to give you a visual of the perfect chart right now so you can understand what I'm talking about, where it's too late to get into this move, but it has to be on your watch list because an entire group of these stocks just made new all-time highs. So pick a side, pick a spot. The side is perfect. It's amazing. 3 bullish gaps last week and hit all-time highs after a pullback. But the pullback was last week. So we're a little bit late right now. So we're beyond the optimal entry. So think about this. Pick a side, pick a spot. When we pick a spot, that means we believe we are near the optimal entry. The optimal entry simply means if I hit that buy button right now, is the likely profit potential of the next move worth the risk on the initial entry? So if we take a look at this chart and zoom in a little bit, and we take a look at Lennar, this was all-time highs over here. So we kind of zoom this out a little bit. You can actually see where we just pulled back from, right? So this pullback into this pause set up the optimal entry. Now we had bullish gap, bullish gap, bullish gap, bullish gap, all of these closing on the highs. So while this side of this stock is absolutely amazing, it's well beyond the optimal entry for a new trade. So what does that mean? That means that we are looking for something like this or something like this before we put on the new trade. So if we kind of go back to what we talked about before, what kind of trader are you? What kind of profits are you going after? If you are a momentum type trader, where as soon as you see a red candle, you're calling your mama, well, that means that you have to move up your trailing stop loss with the price action. And if it pulls back a little bit, you're done with that trade and you're going to look for another trade. If you are looking for the next push, that means that you have to wait for the next pause. So you see how trading can actually become kind of easy. And I'm not saying it's easy to make money. I want to be clear about that, right? What I'm talking about from an easy perspective is once you know what you're looking for and how you want to run your trading business, following and running a business becomes easier. Now, you still need to understand how to manage your emotions. You still need to fight fear of missing out and buying too late, getting in too early, those kinds of things. But once you know what you're looking for, and before the market opens, think about this. We just talked about a couple of different ideas, and we mapped out exactly what we want to do before it happens. So what happens? Well, that means now you're just sitting at your desk, you're having a cup of coffee, and you're saying, when I see what I need to see, then I will place a trade. Traders that become the most frustrated and say trading doesn't work are those that don't have any plan at all, and you're mostly just trading off of scans, headlines, news, social media, as opposed to saying, when this happens, then I plan to do this. So I'm going to break down the rest of the entire week. We're going to kind of dig into a little bit of all of the ideas that I'm watching for this week, both from a market perspective, sector rotation perspective, and then all the way down to individual industry groups. And I will post the link of everything I'm about to show you in the description as well. So if you happen to be watching this live right now, it's not actually going to be in there, but it will be in there 5 seconds after we finish this meeting. Okay. So let's hop on over, and we want to take a look at the way the market has been unfolding from a rotation perspective. And if you go over here, you can obviously see last week was just a absolutely amazing week of trading. And if you're kind of new to our community, you need to know that one of the biggest things that we encourage you to do is not judge your results simply based on I should have, could have, would have made more money, but what was available in the market at that particular time you were trading. We like to kind of break it down into 5-day increments, basically calendar day, right? Monday through Friday. So 2 weeks ago, relatively tough, right? And the market kind of paused a little bit. And we saw that where this paused here, the market kind of paused a little bit over here before it became that, which became this. So when you are judging, again, putting together that trading journal and judging how you did, it's very important to put in the context of what was available that week and how did you interact with it. So if you could think about like you're driving somewhere, and was it an open road and you got there sooner? Or was it stop and go traffic and it was raining out and it was just an absolute mess? You eventually got to where you were going, but it needed a little bit more patience. That's what you need to recognize in your trading. I want to say this very clearly. I'll be the first to tell you when there's nothing to do. I say it all the time in our communities. I'm reducing my position size. I'm taking profits a little bit quicker because the market's kind of back and forth. Last week was not that kind of week. Last week was bullish price action. We got follow through. We came out of a pause. There was a lot to do. So a lot of those opportunities that rocketed last week, they need to pause a little bit. The major sectors that I'm looking at this week and heading specifically into Monday are 2 of them. Obviously, electric vehicle stocks. And I want to point something out to you on electric vehicle stocks that's very important. It's a subtle distinction when you're looking at price charts. And what I'm talking about is the size of the candlesticks and how the size of the candlesticks will influence your perception of whether or not there's order flow on that stock. So let's just think about this. And let's go back to here. Let's say Al, good morning, Al. How's it going? Let's say Al has a hedge fund and he's not paying attention to a stock at all. But then all of a sudden, a stock all of a sudden has these big green or red candles. It's opening down here, closing up here. You can spot in an instant when stocks have institutional attention. And that's when we say belly up to the bar, sit in your seat because something's going on. And I want to show you the perfect example of a stock that's happening in right now. So we're going to work our way down into industry groups. And we're going to work our way over. Actually, I think we have it in sector rotation. Excuse me. Let me kind of go down here a little bit more. And we want to work into this guy right here, Rivian. So what I want you to notice here on this stock. Now, obviously, a lot of these stocks have had some pretty good price action, right? Tesla is just amazing for 2023, right? We know that NIO, these Chinese electric vehicle stocks have been kind of coming off the mat. You're starting to see failed breakdown here, higher lows, clearly making higher highs, a pretty nice pullback, which is why I'm looking at these this week. But I think probably one of the bigger ones this week is Rivian. Rivian, I'm looking for another move from basically this window right here, which if we kind of map that out, even if we go from 26 to there, that's roughly another 38% move up to where you can see sellers came in and did something significant. But this is the big thing that I want to talk about. And this is a really big lesson that I want to show you. So if you can quickly visualize, look at the size and the type of candles you're seeing over here. Okay. We call them melted candles. Melted candles are basically where they open and close in the same spot, or you have just really tiny bodied candles. So let's just think about the implication of that. If we know that stocks that have institutional attention, stocks that have order flow, those are the ones that we want to participate in because the smart money, the deep pockets, are allocating real money, which is why it can open down here and close up here, right? That's the whole point of that. There's real buying pressure, and we see that on daily, weekly, monthly candlesticks when there's separation between the opening price and where it closed. But let's think about the opposite of that. The opposite of that is when it's kind of dancing around and opening and closing at basically the same place. So if we could think about best case scenario is when there's separation, which big green candles or big red candles if you happen to be short selling, but green candles, right? The opposite of that, when there's no institutional attention, there's no edge, there's no separation, there's no obvious supply or demand, that's indecision. So when you start to pay attention to, is there institutional attention on this stock? In a heartbeat, that should influence for you whether or not it should have your attention. Institutional attention? Yes. No institutional, go leave it alone and go look for something else. So now that I talked to you about that, I want you to like, bam, in a heartbeat, look at this stock and see how dramatic it is without institutional attention and when institutional attention started to perk up. Okay, ready? Here we go. Look at these melted candles. Look at how tiny the candles are. No clarity at all. And now look at the size of the consistency where we're starting to see much bigger candles. These little tiny things add up to huge differences in not only in your profit and losses when you start to realize it and how to trade with it, but also in your confidence, because your conviction level will dramatically change when you could look at a chart and say, wow, somebody's doing something in that stock and they've been doing it for a few weeks. I want to start to pay attention and look for an entry. Versus, and we could talk about some of the energy stocks, which we kind of brought up over here. We kind of work our way into the energy stocks. So I just want to bring these up as well. Oil and gas E&P has 9 stocks worth watching to begin the week. Many of them broke longer term order flow, right? So if we kind of work our way down here, this is the right price. You can actually see a longer term move to the downside, and we kind of consolidated here, but we finally got out of that price. So this week, we have 2 different industry groups that are really significant right now. One of them is the residential construction, which I just showed you in DHI. And actually, I want to show you that chart one more time. I believe I showed you Lennar, but if we take a look at Lennar and DHI, this group right now is in what we would call too far from the optimal entry, otherwise known as a bullish echo. A bullish echo is where the trade is really obvious, but too far from what we would call the optimal entry. Remember, we're looking for a push and a pause, a push and a pause, right? And this pause actually pulled back a little bit more and ultimately led to that, right? The other side of the market and getting into ideas that are about to move. So if we could kind of take a look over here, this list of stocks in the industry group, oil and gas, E&P, show a lot of stocks that look very similar to this. Now, there's something very important I want to point out here, okay? It's an interesting scenario you want to stay on top of. Initial reversals, which is what we're seeing here, right? Longer term order flow, finally breaking this longer term order flow. Now, again, this is where we're talking about mapping out what you plan to do before you need to do it, which, dare I say, trading becomes a lot more fun because you're in control of the outcome, not the market. Okay, this is very, very important. All right. So let's walk through exactly what we're looking at here. All right. 9 stocks worth watching. Many broke long-term bearish order flow and traded into a pause. So that's actually kind of what we're seeing over here, right? Broke this long-term order flow, rallied, and now paused. All right. Very important to map that whole thing out for you. All right. This is an interesting scenario to want to stay on top of. Think about what I said here. It doesn't say get in right now. It says we need to see. We need feedback like we talked about before. Initial reversals of established trends can be the best entries for longer-term plays. Now, here's where you're really starting to level up on how you're interacting with the market. The smart move is to lower the initial share size. Initial, not the whole share size, just what we're looking to put on in the market to get some feedback. Initial share size for the swing trade with aggressive add share plans if we get positive feedback by another push and pause. So let's think about what we're talking about here. And again, I'm going to give you this link as soon as this call is over. I'm going to put it in there, right? Here's what I want you to really think about. What we're talking about is a longer term play because the longer term selling pressure looks like it's slowed down. It became less bearish, but not quite bullish yet. And what we're seeing now is the first sign of bullish price action. So think about it. If it's the first sign of new, different institutional attention, well, we should be our initial reversal with initial position size. We're kind of just putting it out there, getting a smaller piece, looking for feedback. If it does not follow through because that longer term move is, nope, not yet, we're not done. Okay, we only got a small piece. However, if Now we have this position on, and it does follow through, and we get another push, and we get a pause, and we hold that higher low. Now we have positive feedback for the market, and now we also have a plan to start adding onto that position, not because we guessed, not because we predicted, but because we planned out what it needed to look like before we took more hard-earned capital and put it into that next idea. So I'm going to actually walk you through the entire process right now, which is this. So don't jump the entry. Make sure the breakout holds by seeing bullish energy candlesticks. Bullish energy candlesticks are big green candlesticks closing near the high of the day. Best case scenario, they are also well bid, which is higher highs and higher lows. So if we kind of take a look at that, that's a bullish energy candlestick that's well bid. Higher highs, higher lows. That's also well bid, higher highs and higher lows, but not an energy candlestick because there's not a lot of separation between the open and the close. So if we kind of keep working our way through that, and in the spirit of the electric vehicle trades, so this is another idea that we have. Obviously, Rivian, let's actually show you that chart of Rivian. Rivian exploded, bullish gaps, good news, right? This is a, let's take this move here. Let me get this off the screen. We want to take this move here just to give everybody some context of what we're talking about, and kind of peeked out over there. That's a 99% move in just over a week and a half. That's a pretty darn big move. Now you can clearly see a push and a pause. That's actually what we're looking for, right? But we also have to put a little bit of common sense into the trade. This is a 96%, 99% move. And the next area that we're looking for, like we said, is roughly a 40% move up to that 36 level. So how do we choose to interact with this trade? Now, this is kind of interesting, and this is really the part that you want to think about. We have one scenario where last week's 5-day pause worked out perfectly, right? It pushed up, it paused. That's exactly what we're looking to see. But we also has that pause after a 99% move in just over a week. Really good news, really good volume, big institutional attention. So we're actually setting up two trades. We're setting up one if it does follow through, and why. And if it doesn't follow through, it continues to push down, I'm going to show you the next level that I'm anticipating where I'm going to be getting involved. So this is very important. I'm not I'm not getting in and saying, I'm just buying it now because of all that. I still want the timing to be right. So I'm not watching this thing slowly melt lower and I'm sitting in a losing position. So you're going to see how I mapped out two different ideas for this stock. Okay, so let's hop into Rivian and we'll discuss. 26 seems to be the level of price discovery. So price discovery is what is the price that it's actually struggling to get through. So if you take a look over here, we kind of zoom this out a little bit. Let me get this off the screen so it's a little easier to see. You can actually see over here, it got up to 26 and couldn't get through. Got above it, failed. Couldn't get through it, got above it and failed. Got above it and failed, tried to get above it. So for me right now, the price discovery in this stock is 26. So that's the level that matters to me right now, 26. You can kind of see that visualization a little bit better, right? So if we continue to walking through, the weekly pause and previous bullish gaps in volume have the top of my list for the week. So now I'm qualifying why it's in my list, and everybody should do that, right? A couple of distinctions to note, though. The stock did not show relative strength with the market last week. So what does that mean? Well, the stock went sideways while the market and a lot of stocks exploded to the upside. So these are little distinctions that we need to start to make, right? But after a 90% move, the stock needed to rest for a new entry that made sense. So we're basically putting the price action and reading the tape now. So we go from order flow to tape reading in this stock, right? If the stock sees additional profit taking and does not trade higher, the next level I'm scoping for a new swing trade is closer to 20. So here's my initial trade, where if it starts to rally and takes out that level, that 26 level that it's having a hard time getting through, this is how I've mapped out the trade, looking for the next resistance level, which is, as we can see up here, the last place sellers did something significant is right around 36. So if it rallies and takes out 26, this is my level. If it does not rally and take out 26, I'm looking for a little bit more reasonable pause where the stock above this previous level holds that bid, and then I'm looking for the next move. So that's how I'm mapping out the entire trade in Rivian this week. And again, obviously, XPEV, Tesla, NIO, LI, Rivian, Lucid, those are all the Chinese electric vehicle stocks that I'm looking at. And don't forget about Ford. General Motors. They're not really as volatile as the ones I just mentioned. But full disclosure, this stock right here, XPEV, other than Tesla, this is probably my favorite EV stock to trade. And when it's in play, man, this stock is just a beautiful, beautiful trending stock. And you can see here, sometimes it just goes for weeks without pausing. So again, Tesla, XPEV, for me personally, those are two stocks at the top of my list. So what I also want to do for everybody is, again, don't forget about this. I posted this link in the description below. You can actually grab this and you'll be able to watch all three of these videos. But what I'm also going to do is you can actually see we have insights on the entire market this week, how I'm looking at the market. We have a really nice breakdown on the options trades and the options market for the week as well. So you're going to be able to take a look at this. We have a really big, deep breakdown of sector rotation, some stocks that had heavy selling on heavy volume, even though they're market leaders. We break that down. You can see sector by sector. We walk you through exactly what we're looking at. Obviously, big breakout here on massive bullish gaps, but pulled back on some heavier volume. That's not conducive to what we want to see. Obviously, this breakout is significant. So what I'm going to do is, obviously, first, I want to thank you for being here with me today. I really appreciate it. I hope I'm helping. I hope I'm providing value for you, and really, honestly, some different ways of thinking about the market, and quite honestly, simplifying things for you, because that's really where the confidence comes from. Not because you can predict, but because you know what you're looking for and you know what you're going to do no matter what. So I'm going to actually post the list of this entire game plan for the day and for the week in the description. Again, if you happen to be watching this live, it's not there yet. It'll be there in 2 seconds. If you're watching the replay, you can click down and get it and make a copy for yourself as well. If we did a good job for you today, if you could please do me a favor, make sure you click subscribe and hit that thumbs up button, because it lets me know this is the kind of stuff that you want. So let's go get them. Let's have an amazing, amazing time in the market, and I'll speak to you soon. Take care now.